Technically, yeah, if we break out above this 29 there, it's a vacuum all the way up to those all-time highs.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today is Patrick Karim, an expert technical analyst from badcharts.com. Patrick, thank you so much for joining us today.
Hi, Elijah. It's always a pleasure.
Definitely. Now, you've noted that really right now, as we're looking at silver around $28 again, it's starting to break out. At least if we close above a certain level. If you want to share with our viewers your perspective on where silver stands right now.
Silver, we've known since those August or September peaks back of last year, and then it did a violent first correction. But since that first violent drop, it's been over the months during that 8th or 9th month correction. It's been doing higher lows on the monthly chart, always above an inclining 1 year, 3 year moving average. No, not showing any sign of weakness other than just a consolidation in price and in time. And right now I'm zoomed in on the daily chart, and silver has been, since those late March lows, has been climbing up a beautiful channel going upwards, always putting higher lows on the daily chart. And it's right again for the past, since early May, I think it's been testing that 28 level. And I actually, for spot silver, I have a daily close at 28.17 or 28.20. So if we have a daily close above, a convincing daily close above that for me is that's going to open the floodgates. I know you might, after that, the daily chart could spill off on the weekly chart, and then June is the month end. It's a quarter end. It's a semestrial end. We're much closer, Elijah, to a breakout than a breakdown by any means. So it's just coiling until it just closes above that daily chart, and then the floodgates are open at that moment there.
It is a pretty impressive rally we've seen. I'm looking at the chart right now, and I can put a chart from Miles Franklin on the screen here. It had a low of $24.01, and this was back at the end of March, and now we're up $4. So that's a pretty impressive rally. But you think it will continue and even break out faster? Is that your view?
Yeah, it's going to accelerate, Elijah, because you've had that move, but below important, what I call a wall. So previous support and resistance dating back from that 2011 to 2013 top after that parabolic run in the 2010-11. So once we broke down below that 29 level, man, that becomes ultra over resistance. And right now, just that move is just a layup, bringing you to that breakout line. And then all you have to do is jump and dunk. And once you do that, it's a vacuum. Because we've seen gold do the same type of layup to that same fractal back in last year, below that wall, below that 2011 to 13 top. Gold went all the way there. And once it closed above that wall, I forget exactly what level, for the 6 months after that, it just rocketed to its all-time highs. And technically speaking, this is really what we should expect from silver once we get that close above 29. It doesn't matter how many people are saying, like sometimes I look at the news, silver, it's at 29, it's important. And sometimes you want to take like a contrarian opinion to that. But I think they're right. The technicals are aligned that if we close above that 29 on a daily, weekly, monthly, we get all these closes, especially June above that. We should have a great Q3, Q4 for silver, and it should really drive hard for those all-time highs.
And that's what I'm hearing a lot of, is that later in the year, I mean, a lot of people are really bullish on precious metals. Are you saying that if we get above $29, we could be to all-time highs of above 50 this year?
Yes. It's, man, it's scary because I know we're saying everybody's saying that, but is it just the Twitter sphere? Because it's not Elon Musk or like some Michael Saylor or somebody like that's CNBC calling that, right? So I'm always trying to weigh that contrarian sentiment, right? Because it's like everybody's saying, oh, there's no more dollar bears, so the US dollar has to go up. But in the grand scheme of things, technically, yeah, if we break out above this 29 there, it's a vacuum all the way up to those all-time highs. And we know how silver is. Then the fear of missing out, as soon as we start getting close to 40 or 50, then CNBC is going to start touting it, talking about it. Then we'll hear some other celebrities getting on the silver train. And that's probably when we'll have a top. Not right now when nobody's talking about silver. It's just right now, Elijah, just as a sweet spot silver. It's not off the lows. It's proven that it wants to go up, but we haven't garnered any real mainstream media attention yet. So it's game on there.
It is very interesting. And you mentioned how it could get to a top, if we do see this big rally. Is that just a kind of intermediate top? We could see a pullback, but then have it go higher after that. What is your perspective?
The way silver behaves, it traps everybody. So all the fear of missing out crowd, it's going to start squeezing up, and then we're going to start having 1% day, 2% days. Day after day, we're going to get 2-3%. Then people, it's going to pull back, but it never pulls back at the beginning. It pulls back once we hit 50. Then we're going to have a sharp correction like it always does, and we're probably going to come and retest the 30 level or somewhere close to that. Just like gold did it when it hit 2000, it came and retested 1675, almost those quarterly defined highs. So silver, that's pretty much how it behaves. Explodes, traps everybody, violent first correction. And then after that, we're going to start making higher lows slowly. So it could be for 3 months, 6 months, and rinse and repeat. People buying late, they get trapped. And then they say silver sucks. They lose their money on the way down. But yeah, definitely there will be a correction. Any parabolic move, especially once you're above all-time highs, there's a price to pay in time and in price. So we got to make sure we keep our emotions in check there once we start hitting 50 there. Because a lot of be calling, it's guaranteed triple digits at that stage. Like I have charts for good targets, triple digit, $200, $300 silver, but later on in the decade. But in 2021, 50 is a target and overshoot on smaller time frames. But after that, it will need a breather before doing another leg up there to that triple digit.
Now, if we look at gold, we're at really a multi-month high right now around 1900. What is the level we need to break above to really have gold be off to the races as well?
1950. So right now, 1950, it was, I forget exactly why I identified that level, but it's some horizontal, like a wall. So it blew up above 2000, and then it went down and it retested 1950 a few times, could never make it. And now we're making a run at that 1950. So 1950 it has what I call it's like a high volume node. A lot of transactions happen there on the way down and on the way up. And once you overcome that, then that resistance now becomes support. And then we're able to vacuum up, because the whole precious metal sector is kind of still always at risk. So if you want to have that bear case, is until gold does a new high on the monthly chart, then it's still delicate, right? Because some people, they say we have a fractal like that 2011, 2013 top where gold wasn't tried a few times and couldn't put in a new high. But right now, gold hasn't tried a few times. This is its first try that it's really going to try to go above its all-time highs. And if it gets it on the first try, then that's just super healthy. All we had was a nice, strong correction pullback, and we're off to the higher targets.
Still with respect to gold, you mentioned one of the things I've heard is with respect to gold and really any asset or investment, when you see on the chart it break to a new all-time high, a lot of people think that is bearish, right? But it's actually extremely bullish because there's no overhead resistance. Are you expecting a new all-time high for gold?
Gold, I'm pretty sure I had the Q3 target, so sometimes I have to refresh the charts because time moves on and I have to add months. But I had Q3 for gold is definitely it's a shining moment, and it will break its all-time highs. It's right now it's angling to do that. And it's going to be like silver, the same thing. So once gold goes at 2,200, 2,250, or 23, wherever, it might overshoot. And then we're going to start calling for 3,000 gold. And we're going to have the charts to tell us how far we are away from the moving average. If we're too stretched, then, and especially if we start hearing around us, like people calling for those insane targets for gold, then we could expect maybe a correction or a pullback. And that would actually be healthy. But we don't want to go parabolic just yet, because the damage is, you've seen it, let's say in the Bitcoin charts or NASDAQ and the dot-com bubbles. If you go parabolic and then you correct, like let's say 70%, man, that creates so much damage that you need like a multiple of 3 to 8 times in length, that time of that bubble to go up and down, multiplied that like by 3 to 8 times in time just to heal from that. So as long as we go up, but we don't over-exaggerate the move to the upside, this thing, as long as we're above like a 3-year inclining moving average, this thing should ride on towards the end of the decade.
And why is that so concerning when we do see that parabolic move, and why does it take so long to recover from that?
I try to do analogy to human emotions. It's like kids when they're young, they can't manage their emotions, so everything's so intense. They go up, and then after that, the slightest deception, and then they crash down. And then when they try to get back higher, they're kind of burnt by, they remember if they went too high, then after that, they might crash down until it evens out slowly. And once you're perfectly balanced and like you're numb, then, okay, maybe I will do that thing that was dangerous, that gave me a crazy high, but at the same time could make me crash down. So it's all that type of emotion, right? And all the people that bought super high, as soon as it goes back up, they could tell, oh man, it's up 20%. Okay, I only lost 80. I'm going to sell. And it creates resistance, right? Until all these guys that bought at the top, that bought Bitcoin like at 50, 60,000, once they're not in the picture anymore, the price action eventually, oh, look, there's nobody selling. And it just grinds higher through walls of worries. Nobody cares. And then when the price gets high again, it attracts everybody. Once it goes parabolic, it reattracts all these people. They get trapped. And it's a vicious cycle that just like repeats over and over.
And that's really why there is resistance in the first place, is people bought back at those levels and are looking to sell at not a loss, essentially.
That's like a good part of it. But like you come back to your example that clear skies ahead, there's also people that after that they bought early, after the 3, 4, 5 times their money, they're going to want to take profits. So eventually, that's why you can't get stretched to the moon, right? Eventually, people are going to start taking profits. People have different metrics. The valuation's too expensive, or for whatever reason. Then that starts also naturally creating some resistance. And if they start selling, the price goes down. People get trapped, and then it starts tumbling downwards. But usually the people that entered early in a trend, they're the ones that are going to sell properly close to the top. And whoever bought close to the top, they'll get trapped. And so for that clear skies ahead, it's true. But eventually you have to remember people bought low, and they're going to, when they did 10X, they're going to want to take profits, right? So they're going to be sellers, those guys there, much higher up.
Now, moving to the mining stocks, if you want to kind of share with our viewers your perspective currently on SLIJ, which is an ETF for some of the silver mining stocks. Are you bullish currently on that?
SILJ, I've noticed a fractal, so a similar type of pattern. So where it went down in the March lows, and then after that, it shot back up. And right now, since that, it's been just like doing like a horn, curving up slowly while nobody's expecting it, not making too much noise. And that's the type of fractal we had in the 70s, where silver went up, shot up, I think maybe in the 74, then it went down, but never went that low and started curving up. And it was just like a crescendo. Then it was just a rocket ship, parabolic, when all that energy exploded. And SILJ is showing a lot of the similar properties right now. And considering silver is gonna, if it breaks above 29, it's like a perfect storm brewing for SILJ to be the unsung hero of all this mayhem in the precious metals sector there. It should really, really explode upwards of that patterns to resolve. So until there's no use looking down. So until SILJ starts making new lower lows on the monthly chart, starts breaking down below 1 year, 3-year moving averages, and you see a bullish pattern like that, refusing to make lower lows, and it's always making higher highs, you got to bet that's your horse to bet on there for to outperform silver going forward.
And when investing in silver mining stocks, do you prefer investing in like the ETF or the actual individual stocks?
The ETF, it gives you that security where it manages like that basket of all these small cap silver stocks. You don't have to worry about like the management and like weighing that. But there's some guys out there that do great due diligence, that have time to manage, like to look at 30 stocks, and they're able to create their own basket. The easy solution for sure, it's to choose SILJ, less management, less like commissions, less everything, right? And that will be your leverage play in a silver bull market, over silver price appreciating, playing the SILJ. But if you have if you like adrenaline and have fun and you want to manage your own portfolio, there's a insane number of silver junior miners out there, and even intermediates, that you could create your own basket. It's I think it's a personal preference of your time. And that's the biggest lesson. Always adapt your trading profile to your emotional profile. If you're a nervous guy and this is a lot of information and you try to manage everything, man, as soon as there's a drawdown in one of your stocks, you're going to sell it. And then that was just volatility in those small exploration stocks. Then you're going to buy on top, and then you're going to play around with it. So first understand, I think, your profile. And then I think that the answer is going to be obvious there, which instrument you should use.
Now, with respect to gold, are you as bullish on the gold mining stocks right now as the silver ones?
No, not as much. It's like in the complex, the order, the gold metal opened the gateways back in June of 2019 already. Silver, it broke up. So gold metal, silver metal. After that, the gold miners will break out first. The last ones to break out will be the silver junior miners, but they have so much catch up to move to do. They're going to give you the most leverage, the most leverage over the gold miners. So always in a bona fide precious metals bull era, you bet on those silver junior miners there. That's where you can, at the beginning there, that's where you get the huge reward. Maybe later on they're going to start fizzling out before the rest of the big caps. But at the beginning, that's where you want to be.
You're very bullish coming the second half of this year for precious metals. What is kind of a worst case scenario if we don't see those runs in both gold and silver?
So my worst case scenario is a volatility spike. So the VIX refusing, making higher lows, starting to crescendo up. A gold to silver ratio, which is doing the same thing. So people are leaving silver to enter gold, more defensive play. But after those two green lights, or red lights, I'm looking for the third red light, which will be the US dollar, which is going to confirm all this. So if the US dollar is also starting to crescendo up, man, we could be in a GFC type event. We could be in a March Madness type event. And we're still at risk until silver does that monthly close above 29. We're still at risk that this could just be a wick we have, and there's a market sell-off, and we refuse to make a new, get out of that consolidation for silver. Gold refuses to do a new high. That's still an option right now. And but when you take a step back, even if we do have a crash in the precious metals and commodities, they're still pretty much at the bottom of the cycle. So they'll take a hit, but if you're not leveraged, they'll rebound, and they'll still the bull cycle for precious metals will resume upwards, and you'll be fine for the rest of the decade. So you got to make sure you're never leveraged. These market crashes, it could happen. You have to consider it could happen at any time. So if you're a day trader, scalper, you got to be wary of these down moves. And the down moves could be violent. We saw in March, it just went down to all-time lows, right? So they're hard to predict, these moves. And the best advice there is don't be leveraged. And as long as you know you're early in a cycle, like a decade-long cycle, then that should save you and bring you back up and win at the end.
Fantastic. Well, Patrick, thank you so much for your time today. If people would like to hear more of these interviews, they can go to libertyandfinance.com in the left-hand corner, put your name and email, and you'll be notified of all the interviews we're doing with Patrick and all the other guests we have on. But Patrick, if people would like to go to your website, find more about you, where can they go online?
Right now, I created with Kevin Wadsworth, North Star on Twitter, we created a website called northstarbatcharts.com. All our charts are there. All our crazy charts and all our high value charts are there. But we're still also on Twitter, and they could find me there. And there's good stuff also happening there. Bad Charts 1 on Twitter.
Fantastic. Patrick, thank you so much for your time, and God bless.
Thank you, sir.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.